So the latest update is this ATM study with now I have these unicorn zones, which you'll have to talk to Flary and Delta about the logic there. But I know it's one of these. It's their twist on a popular FinTwit price action concept, which is kind of naturally dovetails with um, our ATM gained lost logic. And I think it's around these. Maybe let's look and see if we can do the. Maybe if we look at clipped, move to the high low. Okay, what's up, CP? So with the somehow this is connected to a fair value gap occurring around move to the high or move to the low. So and then and there's a condition that somehow the fair value gap has to there's some intersection condition. These are filtered somehow. Again, I'm not remembering the exact logic, but it's basically fair value gap lining up with the top of the or the bottom of the move to the high or the top of the move to the low. There's some kind of intersection there. And again, unicorn, I think that's the name some of these guys use. I don't know if it's a variant of ICT stuff or whatever. But anyhow, this is the addition to the ATM study, and also had these. There were some annoying crash bugs that either, in all likelihood, it had been there, and I just hadn't seen it from what I was trying to do. Although usually when I do updates to this stuff, I try to crash it and see if see if I can break it. But sometimes Sierra version shifting. I have to flip back and forth between versions sometimes. Sometimes bugs crop up that weren't there before. So hopefully, again, if you guys always, if you notice anything, if you get any crashes, I definitely want to know about them. Put them in the chat here, and I want to see if I can replicate it. And if because we don't want to. Some of these studies are a mess. This one in particular is huge. It's like 6,000 lines of code, and doing a bunch of complicated stuff with you know arrays and vectors and whatnot. And so I don't catch everything, and LLMs, fortunately for us, are still really bad at this stuff. So I gotta, I'm doing it the old-fashioned way, especially with this code. So again, if you find those bugs, it really helps me make a better study, polish, tighten this stuff up, and we want it to be usable and functional. I wish there was a way to lighten this up because this is a ridiculous number of milliseconds for running the study. And I don't know that that's the update time on the front end, but that's certainly if you reload the chart, you can see the lag there. And now I am running this on so 30 days to load, but at a 1 minute chart. So the lower the time frame, the more bars on the chart, the heavier. This guy's a monster. So again, use it in as few days as you possibly can. Now, a lot of times, if you're in an active range, it doesn't have to be that long because the levels you're going to be hitting are going to be generated within the past day or so, past a week. But if you really start to get extreme moves, then you're going to want to have it on a longer look back, and with the real low time frames, that's obviously a problem. So done the best I could to tighten this up. It's still possible that some things might be able to be improved, but it's kind of a monster. Just the logic. I'm not sure how much we can gain on this, but it is kind of continually on my to-do list. So the unicorn zones again. I don't know if Vespa might actually know a little bit more about this than I do. But the logic, I think, being for those who aren't here, I think so. Display clipped move to high, move to low will give you an indication of I think what's going on, and it's basically that you have a fair value gap intersecting with the um, top with the highest bar or the first bar and the move to the low, or the from the other direction. Again, the fair value gap has to intersect with the lowest bar and the move to the high. So the top of the move to the low or the low of the move to the high. Fair value gap, look for the retest. And we've got a signal that triggers. And one of the things I want to do here is test this first touch signal and see if we can get any kind of fun stats. Now, 1 minute might be a little ridiculous. Maybe we can put this on a higher time frame chart. But the other thing about this study is I have tried to get efficiency where I can, which is that if you're not using something, take it off and it'll speed up the study. I'm really trying not to do superfluous things other than the kind of like the core logic of recognizing where the move to the high, move to the low are. So if there's anything that you can turn off because it's not necessary to your trading, turn it off. So, and also, the clipping, if you don't have to look at that, that's also the drawings can be pretty heavy too. But I like looking at these. Another thing you might want to do is clip on touch instead of on a close below, and that might be able to keep your chart less cluttered. But I wanted to see, it's fun to keep these around, and we also have, there's one more subgraph. So subgraphs I added here. As with the other zone-based studies, I want the low, the low of the buy zone and the high of the sell zone. I want those to be there so that we can risk off the zone. Although I'm not necessarily sure. I think for actually trading with this, you may want to do something more, risking off, for instance, the swing low before that or something like that. I'm not necessarily sure. There's some other there are other ways I could think to use this, but it certainly is a fun first approximation on these things to play around with, just risking the other side of the zone. But again, we don't clip it. We do clip on touch if you want to, but I think the basic clipping logic that we at least started with was a close below. So I'm going to show this, and I'm just going to go ahead and let us see kind of the full thing. Now, let's play around with stats collector here. Subgraph signal stats collector, and we want to do on proximity, and I'm interested in doing this with the buy touch subgraph based. And y'all know off the top of your head what a rotation in NQ is like right now. This is definitely ridiculous.
I don't.
You think like stops right now it would be like 80 ticks or something like that. Let's do like an 80 tick
Uh,
stop.
Maybe even I was gonna say like
100,
40 points.
40 points.
Yeah.
Okay. Yeah. Yeah. So we could do like what is 40 times 40 times 4 is 160. Let's do that. Let's look for 2R on that. I do think you want to play these for skew. Now we'll see what stats say for what they're worth. And okay, so this one's a buy touch, this one's a sell touch, and we're gonna do. Sorry, I want that to be tick based, R based. Play around with the subgraphs in a bit, and maybe doing the maybe playing around with looking at PA zigzag or whatever. Okay, I don't want to signal timeout. One contract. Those opposing trades. I don't know that we want to do this right now. Yeah, we're gonna get. Yeah, let's see how this. Let's see how this looks. So we can add slippage later. I want to look at all the drawings. All right. Not too shabby for it's a pretty unreasonable sharp ratio, but the there's a meme on one of those Rob Carver posts where, which worth looking at by the way, for everyone interested in the sort of systematic trading stuff, is Rob Carver's books and blog posts are really interesting. And but he had a meme on this on anytime I see a sharp ratio like that. He had one, the Ron Swanson one, where they're saying, as your you know the girl's saying my sharp ratio is 2.5, and he's saying, did you check your back test? No, it's really 2.5. Did you check your back test? No, it's okay. Look ahead bias. I screwed it up. Um, but I think that's a lot of trades, and this is a wild regime we're in right now, and that's for sure. So I'm curious on if we have a time of day effect here. Let's do this. Okay, so I don't really change the chart, but it does bring this. This is one of the things I like to look at. Is this average return on risk units? So I think that's going to tell you something about. Um, I think that the higher this is, the more comfortable I am with the rest of it, particularly before adding costs. And that's kind of the thing to look at. Some of these are, I don't want that title. If you're looking at stats without costs, I think you want this number to be high more than anything. Now, again, caveat, you really should. I'm not going to say, I'm going to say these are limit orders. So I'm going to say entry slippage estimates. Obviously, you have to then think about the fact that if it ticks it and goes, like some of these do, did you get filled there? I don't know. Of course, the thing is, you get filled on all the losers, and what percentage of the winners, of the really big winners, do you not get filled on? Now, all the stops are the same size here, so I'm a little less concerned about that. But again, let's do stop loss slippage estimate. Say we're paying half the spread. It's probably pretty big right now. And then no entry slippage. And I don't know. This doesn't really matter that much. These are super cheap, all things considered, especially if you're trading the minis. Um, so, yeah, I think we could add in. Let's see. So again, that gets me down to a sharp ratio that's believable as well. But let's see, just for the hell of it. Let's look for the last 3 months here and see how this guy holds up. Pretty damn well. Now it's a fucking monster because, but yeah, that holds up pretty well. I say. Now the question again on limit order execution, how much of that did you realize? How much can I haven't done the math on that. Maybe it's something that's worth doing, is estimating. If you estimate your fill percentage, and this is probably something I could put in a study, which would be cool to do, which is estimate if you're doing on procs, so you're simulating touching the level on limit order, fill percentage, right, of the winners, where you could just zero them out on the stats and say, like, all right, how robust am I to not getting filled, right? Like, how good does my queue position have to be on these things? Now, again, it's pretty, now this is a 1 minute chart, and so the question is, yeah, how fast, how much time do you have on these? How reasonable is it to say, like, you got in? I think all these things are worth doing a proper back test, either with Sierra's replay back test, which is sort of excruciating, or with just kind of careful live analysis. The nice thing about reasonably high Sharp ratios. Now this isn't like insanely high. If it was like a 10, you could test it this week and figure out if that's real. I think with the rule of thumb is on an annualized. So thinking about an annualized, and you do 1 over Sharp ratio squared, should give you the length of the average drawdown, if I'm not mistaken. So I think you could be in a drawdown, let's say up to um, let's say be conservative. What's uh, let's say be a little conservative here. Let's do 2.5 squared is so 6.25. So what's 1 divided by 6.25 is a 16th of a sorry, point 0.16. Let's say you could be in a drawdown for 2 months with the Sharp ratio. That's that good, and that's a ridiculously good Sharp ratio, all things considered. If you could maintain that long run, you will have a very very good ride. Um, but again, all this bears careful testing and analysis, of course. But all this to say that looks pretty cool on first pass. Again, crazy time to be um, playing markets. Um, but I think we can. I'm curious what you guys would like to see, and if y'all have any questions or if you have any issues that you found that I could take a look at. Let me bring this back to a reasonable number of days to load. Let's see how much lag is on, like, I don't know, 15. So again, uh, holy shit. But again, you see the drop off on that Sharp ratio, and these volatility times. I got a buddy who works for G Research. There's one of these secretive quant shops, and I think that Liberation Day was like their biggest day of all time. So it's I think it's fairly consistent with day trading, sort of intraday trading strategies like this, particularly positively skewed ones, like we're playing here. Where you're looking for a 2R skew, you're looking for a bigger move off of these things that really loving a lot of vol, and so it's pretty nuts that if you look at 90 days, the bulk of you're like the what was the P&L over 90 days was not more than like 3 times that, whereas so whatever the last 2 weeks effectively contributing the bulk of your P&L. So another thing that would be said about a lot of this stuff is a judicious choice of the times to play. Is wait for vol to get the vol environment being sort of right rel how you trade, is I think pretty big. And one of the goofy things I think people get into is they like action, they like to play, and so they play even when the conditions are not favorable. And I think you just gotta know thyself. Like I think this is what Warren Buffett does with oil stocks. um, I think, but anyhow, I think that this is a fun one. I hope you guys enjoy it. I hope it's useful, and let me know if you find any issues with it. And with that, I wonder, if y'all have any questions, if there's anything, I don't know, any improvements I could make, any other bugs you found that, let's say didn't get addressed by this last update here, this guy. So, what you think of Vespa? What's been working for you these in these crazy tariff days?
Yeah, IFBG and the all-time classic SCAD clusters.
Awesome.
That's yeah, SCAD is the best.
You like using it for targets or leaning on it for trades or both?
Both. Yeah, both. I mean, it's definitely. I feel like there's like a gravitational element to them. that once you're in proximity to them, you're gonna go to it. So
That makes sense. Oh yeah, market memory. And I think with a lot of this stuff, let's see on SCAD. Let me open a SCAD chart. I just want to look at it. See what this last. Let's see. Let me duplicate this one. Yeah, let's look at SCAD. And one of the things I would like is let's see how.
there's a
I wish
great
it.
example from today because there was one created today, and then before the market closed, they went and ticked it.
Oh man. Yeah, the magnets. Let's see. So let's do 750. Like the session times. All right, let me just get rid of these drawings too. Let's say race drawing mode. SCAD. Just take that V2 off there. Okay. What do you like on the pivot grouping? Is this your kind of, do you do the standard one?
I've been doing Flurry set it to 80, so I kind of widened it up
Okay.
for the
Yeah,
increase in volatility as well.
let's do it. All right. Say, okay, wait, let me just turn off this. Oh yeah, look at that.
Exactly.
Yeah, totally. Yeah, I always felt like I was looking at this Delta Pivots business in general. I mean, I feel like if you look at the fibs on these during the day, it's almost like it's a um, like setting the harmonic structure in the market on that time frame. And of course, they kind of layer together, which is I think the cool fact about this these clusters. Um, but
Well, even the blue line means that there were multiple. Uh,
yeah, I
I
mean
guess I don't know what the
look at that.
individual term is.
Yeah, I mean,
Yeah,
I know. And then you got when the U.S. and Euro put in the delta at the exact same spot. I hell yeah, yeah. And I think one of the things I've probably talked about this before is I've got that market memory study that I would like to get out here, but I feel like it's not exactly where I want it. But I would like to test these more. I feel like again it frustrates me when I can't. Be, you could be like, that's ridiculous. There's no way in hell that's a random, like,
right.
there's no way. There's absolutely, and then
No,
we put in the delta at the exact same spot and then take it and go. Like, and then whatever. I mean, it's just, the two of these things are like, yeah, maybe it's pareidolia or whatever, I'm just seeing patterns tripping, but I think with some of this stuff, and it makes in this one too. You have a thesis, right? Like there's some intuitive reason. There's a reason behind it. There's a reason why there'd be a risk whatever risk premium here. Why you'd be leaning on this level. Let me put a longer look back on this guy. What look back do you like on SCAD? You like 90 days? But right now, I feel
I
like I don't know. You just want to capture the range you're in, right? Capture the
yeah, I kind of subscribe to. I mean, SCAD's really another wrinkle with this study is managing the look back period, and I kind of subscribe to the Flurry philosophy of using the most recent like
do the leg.
daily.
Right.
Yeah,
Right. So we want to do like let's see how I got goofy on the manage chart drawings. I copied it over. All right. All. So option select all. Delete. Oh shit! Is it overlaying from the chart from two? Yes. Yeah, that's not a problem. All right, so yeah, so if we want to do the Flurry method, which is look at the leg we're in on a daily chart, I guess, or we could probably go up to probably 4 hours would tell us. Probably 4 hours would be give us a decent look at the higher structure. So it'd be like, I don't know. Are you taking this? You taking the Liberation Day leg? Is that where we're working from? It's probably the
I
or
so
the.
I use the daily. So I'm back in December for
Oh,
the
okay.
daily.
Oh, okay. Using the whole daily leg. Yes, I'll do the one. And then let's go back to let's get the year. Oh, not 1 minute. Come on. Let's see. Uh, so I got you. Okay, so this is the leg we're in.
Yeah,
Um, I got you. Or we did this one and we're retracing it to some extent,
yeah. I mean, you could even do March. Really, I might even need to update mine.
right? To get the scat at these lower levels. It
Yeah.
depends. Do you think we're? Yeah, I think the jury's still out on are we continuing this leg or are we? Like '08 had a bunch of these too, where it was like there were these insane up days. Um, but
Well, maybe. I mean, maybe you could talk about that a little bit, right? Because these eventually go stale, right? So the balance is you want to have landmarks, but you want them to still be relevant.
totally, yeah. And again, one of the reasons why I would really like to be able to test this one better is because I want to know, like, there is some, and I mean, you can even see it on especially if you look at the studies with fibs on these. I mean, like you can see the ones that get made, um, either with high delta seem to last longer for reactions or more recent in time, right? And there's some like factor there, which is like it either has to be recent, like we just made it. So this is the one that's sort of like these are the ripples in the pond right now that are dominant, when you're looking at the water versus like it was a big splash a long time ago. And so it's still got big ripples even though it was a long time ago. So there's some kind of like I want to be able to quantify those to some degree. I would like to not be waving my hands and being like, "Wow, look at that banger," but I don't account for like how much I would have gotten wrecked trying to play it here. Um,
What is it about uh, this study that makes it difficult to use a subgraph, and why is it a drawing?
Well, part of it is because it plays these levels over and over again. I mean, that's the thing with the clustering is like I want to see when it comes back and puts in more delta at the level. So it's kind of like, do you look for the right? Like I don't know if you wait for it to put in more delta, rotate away, and come back is kind of what I think the right answer is, and that's in some sense what I've got on the market memory study, which is I think the best. Like this is I have a current approximation to this sort of a thing, but it's not exactly where I want it. I want to be able to control these sorts of things though, which is like I don't know if it'd be better if there's some way we could track like how much delta lives in this thing. Like maybe you could filter it like that. Um, uh, but I think that the tough thing for me is it's just when you have a study that's very much a chart drawing, like a pure chart drawing study. And you get a lot of these things. It's like, okay, maybe it trades through it 20 times, and then it starts to play, or it starts. So we start to build more delta at that level. Like, when do you start taking it seriously? Or you don't want to hit every one of those forever. But right, so it's connected to a more general problem, which I'm very interested in as well, which is like, all right, for support resistance studies, I think there's a lot of juice there. I think there's a lot of, I think one of the cool things that we've done as a team here is done like rigorous uh, price action studies. Take a lot of these day trading concepts, these price action based concepts, and make them mechanical and repeatable and testable. And then I think this is my big question in general is like, yeah, can we quantify how much can we quantify this support resistance trading, which is totally a thing. People in these big shops are using these concepts as well. The question is like, what's the can you quantify the juice? Can you say intelligent things about what your risk ought to look like? All right, like I think, and again, you'd be like, oh my God, these sort of like there's a, but it's also like we also have an ass ton of lines on the chart. So like we're
Yeah,
gonna bounce
yeah.
off of them, right? To get the pareidolia factor. How do you kind of mod out for that and see like there's no way that all of these are random. Like these are definitely meaningful. The market does care about delta and does care about what price that delta was put in at. Like how could it not? And the question becomes again, how can we sort of rigorously quantify and make actionable this sort of stuff? Which again, I know like Flary and you guys are can use it to amazing effect, but I'm really bad at trading, particularly by hand. And so I want a lot of data, and I want to be able to do something basically like a total robot, if not an actual robot. Um, but again, I think it's a one of the coolest ways we have of looking at the market. Just it's kind of the outstanding open problem here. I think in more generality, which is like, all right, you see a support resistance level, like can you quantify for a given level how much juice there is over look back at that level, right? Like what you'd be like, this looks like an SR level. All right, is it better than random, right? Like if I drew a line here and was looking at like how many times we bounced off of it, rel something that was like we're all a totally random price series, right? Like how many times would we expect to bounce off of it? So I think the other question there is some sort of like statistical one that I don't really have worked out well. That I need to spend some more time thinking about, or at least thinking about modeling. You do like Monte Carlo model maybe, and say like, all right, for a given level, what does the probability distribution of sort of random level touches look like? And then if you have a baseline, like what does zero information look like? Then you can start trying to quantify like, okay, does this have information? Is this non-random? And for some of these, again, like, damn, it has to be non-random. But I don't have a rigorous methodology yet for addressing that. So, definitely on the to-do list.
Well, not to get too crazy, but I kind of, I said it already that it's like I think of it in terms of like a gravitational effect. And so, if you like, I wish I might find the GIF and link it or whatever. But yeah, Flurry is on here. We were talking about this before. That it's kind of like you have this random object and a celestial body, like a moon or a planet or something, that like in perfect gravity or like well-established gravity, it's just circling it, right? But before it's established the rotation, sometimes it gets sucked in and like flung off of the gravity, or uh, there's just all sorts of like random events that can happen surrounding them. So it's more than just support and resistance. It's like sometimes we fling off of it as well. I mean, like kind of in this example, um, I'm
Totally.
not explaining it very well, but
I think
it's more than just support and resistance.
you're saying that it like wants to tag these levels because that's where significant liquidity has been found in the past. Is that kind of the would that be the like
Yeah, and like more than that, like once you break it, you're kind of flung
uh
further. Like it adds momentum to the pulling away from it.
interesting. Yeah, once you pop out of the okay, I got you. Once you sort of pop out of the gravitational orbit of one, you get some velocity just from that.
Exactly.
Interesting.
Yes.
Interesting. Yeah, again I think I this is one of the coolest ways we have to look at the market, but again, I'm like I really I do yearn for a way to really quantify this one better, and I do think that that's somehow the right track would be what given a level, right, and given a certain like given a level and given a some volatility and drift parameters, right, you sort of need to model the price series. So Flary says like a slingshot around the moon to pick up speed for the trip to Mars. I see. So these little centers of gravity that you want to fly into, but that also have some ability to propel you past. I got you, and Vespa with the rock on the foam, making the gravitational well. It's funny because this is totally
Exactly.
my grad school studies are on, in some sense, mathematical GR. So that's kind of my jam. But I think um, the idea of basically being like, what would we expect in terms of sort of level touches from something that's totally random versus what did we get, and then you should be able to start quantifying like what levels have juice, and then we can get more deep on like, okay, how much delta do you need to have put in a level, like whatever, being able to quantify these things as far as like what makes a good level in terms of delta, in terms of now again, I think one of the cool things we have about about the unicorns, about these other gain loss, move to high, move to low, is we've done the absolute utmost to make these testable, and the IFPGs and whatever, a lot of these price action concepts, which you don't see a lot of people, you think, did you guys do any stats on this? A lot of things it's not even possible to. A lot of technical analysis concepts are very ill defined. In terms of like, I mean, even if you read the old like cool tech blogs, which I definitely recommend doing, but even then, it's like, what's how are you making sure that you're not fooling yourself and tripping on patterns that you saw, and how can you make sure you're being rigorous in a way that allows you to kind of walk forward and um, be sure that you're doing the same thing that you were doing on the test set, rather than you sort of like curve fit and found magic patterns that weren't real in a test set. Of course, you can always do that, right? You do that with anything that's got any degrees of freedom, as you can sort of twiddle knobs until you find something, and then it's garbage. So again, we're trying to give you the tools to not do that, to do this rigorously. But I think again, on definitely on my wish list here is some way to really up the um, alpha quantification on this stuff. Which like there's no way that's random, but let's prove it. Would be the next.
Well, I just wanted to give you guys kudos for you know, adding value for Prop Alpha subscribers and, you know, giving serious analytical treatment to, unicorns and IFEGs and stuff that you see on Twitter, but you guys take it to like the next level and allow you to apply stats to it. I don't think anybody else is doing that. So kudos to the Prop Alpha guys.
Glad you find it useful. And again, one of the best things y'all can do is just let me know what's not working. And I couldn't believe how bad the bug on the ATM study was that I spent all of whatever Thursday working through. And I think the best thing that helps make this stuff better is just feedback from you guys. So I think that's the I have fun working on this stuff, and as much as I'm pulling out my hair when something's messed up, especially on this monster of a study, I want to have a good product for you guys, and so really any bugs, please put it in the chat, and you know make it make it public. I don't care. I really I want to make good stuff for you guys. So I think yeah, let's see. Is there anything else? Anything else you guys want to kick around or? Um, I finally got my internet fixed too, so I want to get back on this program, doing the office hours again. I got frustrated. I'm sure y'all got frustrated too. I live in a slightly older house out in the country, and I was having my computer was just sucking too hard on the power here, and so I was having these power oscillations that were cut my mic out every sometimes every couple of minutes. So I got that fixed, and hopefully this has been smooth stream. So I want to get back on these, and we'll keep trying to do this kind of stuff. Review whatever the new study. Anyone has questions, and then I'll try to find some fun topics to nerd out on as far as like stats and stats adjacent things. I do think doing a deep dive on like what can we say rigorously about support and resistance trading in general, as far as quantifying the alpha at a level, as opposed to that game that we did one time, which is turn the bars off your chart and then draw lines and look at how many amazing bangers you find there, and saying where's the periodolia, where am I just pattern fitting like um, someone on hallucinogens, or where am I really finding where's the real sauce here? What's signal? What's noise? And there's a shit pile of noise in this stuff. But I think that I saw something about there's some insane stat about the noise in the signal noise ratio in financial applications is like it's like worse than communicating with deep space probes. It's absolutely fucking insane how much noise and how little signal there is. Um, but anyhow, I hope this stuff can help on that front. Help you guys sift out the signal and the noise. But we'll keep iterating.